Capacite Infrastructure. Now, this is a company which, it's quiet today, the stock, but this week it's up close to about 14%. They've reported a strong set of Q1 numbers. The net profit is up 180%. The revenue growth has come in 32% on a year-on-year basis. And the company said that they're expecting a 25% revenue growth for the full year. Rohit Katyal, Executive Director at Capacite Infraprojects, is now with us on the show. Mr. Katyal, thank you very much for joining in. First, if you could elaborate how you plan to achieve this 25% top-line growth for the full year, and is there a possibility you will do better because Q1 has been stronger at 32%?
Yeah, good morning. So the entire order book at the moment is close to 9,800 crores. And the 25% growth is the minimum requirement what we need to deliver in the current financial year to the clients. Therefore, while Q2, due to monsoons, though being the best quarter, second quarter in the history of the company looks at substantial growth in Q3 and Q4. And therefore, we have given this projection of 25%. If we achieve what we have set ourselves internally to do, then definitely your idea of a better growth than the given 25% number, it will surely be achieved.
Okay. Mr. Katyal, you mentioned that there were some issues in Q2 with respect to heavy rainfall, and despite that, it has been a strong quarter, and the second half would be better. You had earlier indicated that the order inflows could be to the tune of 3,000 crore rupees in FY25. It's at 250 crores in Q1. So will the last 3 quarters make up for the weakness that we saw? Because it would be essentially over 2,700 crore rupees. Is that something that you'll be able to achieve as well?
So let me clarify. Our order book does not include about 4,000 crores of orders of MHADA project, which we are executing in joint venture with Tata Projects Limited. So in the first quarter, we have actually added another 1,000 crores from that order book into our executable order book. And therefore, the total inflow into the executable order book in the current fiscal is close to 1,250 crores. Having said that, we carry some L1 positions. And given the traction, both in the state governments and central governments for PMAY and healthcare projects, that is hospitals, we are more than confident of achieving 3,000 crores, excluding the orders which would get added into the executable order book from MHADA project. So 3,000 crores.
So 3,000 crore of order inflow guidance is intact, and this is X of the MHADA BDD project that you're executing, which was about 1,000 crore in terms of the increase in the order book in the current quarter. X of that, you're confident. You spoke about L1. What is the number?
We are close to about 1,000 crores. You know that in private sector, we work with practically all the top clients. And in private sector, it is not a bidding and the L1 situation. It's always on more of invitation and negotiation basis. So we are very close to closing some of those orders. And in the government side, we have already submitted our bids. And we do believe that some of those bids will get converted into orders in September of the current financial year.
Okay. You know, the other big event that Maharashtra will be seeing is elections in Q3. How does that impact order activity in general? And also wanted to understand the competitive industry. We have a lot of players entering the Mumbai market. There are a lot of real estate projects. The supply is increasing. Is that impacting take rates in any way?
So, yes, you're right that elections, once they are announced, hopefully by October end or November, whenever they happen, 40 days prior to that, you will see code of conduct being imposed. And that will be basically a blackout or silent period, if the market knows that. So there will not be any bidding in the public sector space in that period. However, having said that, private sector works and bidding and order placements will continue. Further, whatever projects are being bid for CPWD, central government funded projects, that will continue unabated because the state elections will not impact that. So that's the part number one. Point number two, you must have read in the Economic Times yesterday that there is shortage of quality contractors for private developers. Rightfully so, the launches are at record high. The projects, ideally, which are coming in Mumbai MMR area, also in Hyderabad, are easily classified under super high rises. So there is a good opportunity for deserving contractors like ours to build up decent order books. However, we also believe that there will be certain uptick in the pricing parity as opposed to what we were getting in the prior years. This is simply a demand-supply mismatch. And the contractors, I believe, who are better placed will stand to gain from this.
So is there any indication how much would that pricing go higher by? Would it continue this year and go across to next year as well? Because as you've been pointing out, we are getting a lot of quality developers, but quality contractors, that, as you said, is in lesser supply. So will this continue, this price increase phenomenon?
Madam, I wouldn't like to speculate because we work in a non-speculative environment. We do not speculate on commodities. We have a pass-through clause. But I do believe that we are into nearly now 1 to 4 years of bull market in the real estate side. And given the registrations, which are at record high, with apartments in excess of 5 crores, also seeing about 150% increase last financial year, I do believe the momentum will maintain. However, to what extent, that is for everyone to see, and I wouldn't like to stick my neck out and guess on that. But given the private and the public sector impetus on the building segment, we do believe that there is a good opportunity of all contractors of repute in this segment.
Do you think you can push higher on margins given the pricing power that you could enjoy now going forward? Can margins go up to 20%, sustain there, hold there?
Ma'am, if you see the last quarter of the last fiscal, we were at 8.51% margin. That was a 200 basis point increase over the fiscal 31/3/23. So basically, you already have seen a 200 basis uptick in the net profit. Similarly, an uptick in the EBITDA and EBIT margins. The order book, which we are sitting on at the moment in time, that is for sure to maintain this momentum. And as we increase our revenues per quarter beyond 650 crores, there will be an uptick of obviously another 50 basis points because of lower fixed cost as a percentage to sales. So answer is yes, these are sustainable. The order book currently what we have has to be executed over the next 3 years or so. And apart from whatever fresh order inflow which will happen, and therefore we will see a momentum built up on all fronts, whether it is revenue, whether it is EBIT, EBITDA and PAT.
Okay, all right. Mr. Katyal, we take that point. Thank you so much for joining in today with your plans and the business outlook going forward. That's the word coming in from Capacite Infraprojects, sounding very confident on achieving the guidance that they had given earlier and also about the newer projects that they are L1 on. With that, let's talk about Shyam Metallics.